Boom! What's going on, Investomaniacs? Your boy Knight Rider here, and it's time for your Robinhood stock market update of the day. The Dow Jones and S&P 500 rallied about 1.43% on Tuesday, with the Nasdaq up nearly 2% after it was announced that the U.S. would remove certain items from the new China tariff list, and others would be delayed until mid-December. Some view this as Trump displaying weakness in how much pain he is willing to tolerate. Trump does have to be re-elected after all, while President Xi is a dictator and can theoretically withstand significantly more pain and just wait out Trump for a nice cushy Dem to come into office. Not exactly a fair fight. Regardless, a de-escalating trade war, even if only on the United States' side, is positive for the market's short term. Up next, Snap tries again with hardware. Spectacles 3.0. Forward this to your 1 to 0 friends who will actually be interested in buying these things. For a whopping $380, somebody without much price sensitivity can strut around in their brand new pair of Snap's Spectacles 3. A limited number go on sale in November, featuring a new HD camera to create depth perception as you semi-creepily record everyone around you. Consider the design pseudo-Coachella geek hipster chic. If at first you don't succeed and have to write off $40 million worth of unsold spectacles still sitting in a warehouse somewhere, spend a lot of company resources to try 2 more times. Third time's a charm, right? Here's the social network's timeline/quest to add hardware to its app's success. Spectacles 1.0 in 2017, a $130 per pair costly mistake. Snap sold them via pop-up vending machines, but made way more glasses than the 150,000 that were actually sold, costing investors $40 million.
The House of Pain.
Spectacles 2.0 in 2018, a $150 slightly more expensive, slightly thinner mistake. I know, they look the same. I had to make sure I actually had 1.0 and 2.0 because, they're not really all that different, but they are different glasses, I promise. You would think after 1.0's failure, they'd probably modify, the frame of like 2.0 a little bit, but apparently not. Snap made the glasses a bit narrower and they were waterproof this time, but that just wasn't enough to help it catch on. And now, Spectacles 3.0 in 2019. A $380 mistake? Maybe. While Spectacles 2.0 was not really Spectacles 2.0 and more like Spectacles 1.2, this one is actually pretty different. First off, you can clearly see a massive change in the aesthetics. While the previous spectacles basically looked like a dollar store plastic glasses, like these, but with a camera, these glasses are distinctly higher end looking. Second, versions 1 and 2 were limited to a mere 10 seconds of video recording time. Version 3 will give you a full minute. Still relatively short, but long enough for most video posts, and certainly a large improvement over 10 seconds. Version 3 includes augmented reality, something version 1 and 2 did not include. You can record and then add in augmented reality features before you post. And then there's the price tag at $380. This is expensive for any company, but particularly a company whose user base is primarily made up of teens. Ironically, spectacles may actually sell better to users on other platforms like Instagram. At one point or another, many tech companies need to decide if they are going to be a closed ecosystem like Apple or an open ecosystem like Windows or Android. Originally, Snap decided to try a closed ecosystem strategy, with the first 2 versions of spectacles only being compatible with Snapchat. Users did not like that, and perhaps motivated by poor sales as well, Snap had a change of mind mid last year and opened both versions of Spectacles up to be more easily used with other platforms. But 3.0 will be the first version to be initially released and be able to be easily used with other platforms. They even offered a square video export option, which was likely a blatant attempt to attract Instagram users. The takeaway: while Spectacles 3 appears to be a solid upgrade from the first two versions in terms of aesthetics and functionality, it also comes at a significantly higher price. At the end of the day, friction and utility is still a problem. There's nothing wrong with a tech company testing out a wearable device like Spectacles, and the concept kind of makes sense. It is ever so slightly more convenient to push a button and record via your glasses as opposed to recording with your phone. But that minor potential benefit is vastly outweighed by the transfer time between your Spectacles and your phone. First, you must manually connect to your phone via Bluetooth or Wi-Fi every time you want to transfer data. If you aren't at home, automatic Wi-Fi probably won't be an option because your sunglasses probably aren't going to be connected wherever you happen to be. And keeping Bluetooth permanently on is not a preferred option, as Bluetooth drains batteries quite quickly. Thus, you must manually connect to your phone every time, and then wait for a snail's speed transfer of video. After connection and waiting times, it really becomes quite inconvenient to use the Spectacles, which is why more than half of the people who bought Spectacles stopped using them in less than a month. This friction has not been resolved in version 3. I highly recommend you use the wait and see approach.
Don't buy.
Wait for a few quarters of data to come out, and if it's good, then you'll still have years of Spectacle success runway ahead of you. Up next, new US tariffs on China get delayed because of holiday shopping? Tariffs. President Trump announced them just 2 weeks ago. With most other things already being tariffed, the U.S. planned to tax the remaining $300 billion worth of consumer products made in China starting September 1st, including the iPhone. But yesterday, Trump said, never mind. And instead, we will wait until December 15th for most of those new tariffs so American shoppers can have a merry China-manufactured Christmas. Teachers hate procrastination. Markets don't. Markets like procrastination because that's more money for companies, at least in the short term. The tariffs were essentially a 10% tax that would hurt profits for companies manufacturing in China, while raising prices by 10% for everybody. Here's who wins with Tuesday's sudden flip: Apple. Shares popped 4% because iPhones and MacBooks won't get a 10% price boost, at least not until after most of the holiday shopping is done. Made in China AirPods, Apple Watch, and HomePod, however, still get hit on September 1st. So if you were planning on buying one of those items, you may want to consider sooner rather than later. Mattel and Best Buy. The stocks rose 5% and 6% respectively, as made in China action figures and speakers will remain tariff-free through the holidays. Nike. Sneakers were also on the exemption list, so the swoosh jumped up 2%. The takeaway: this sends a message to China. If the trade war has political or stock market costs, America might cave. Credibility is important in negotiations, and Trump's credibility takes a hit with this one. Political cost. Since American buyers pay U.S. tariffs, not Chinese exporters, this latest round would have been a Christmas Grinch for American households. And the stock market costs. If tariffs cause poor holiday sales, stock markets likely would have suffered. And since Trump uses the stock market as a barometer for his success, he wants markets to stay strong. Up next, Viacom and CBS finally agree to a huge re-merger. Distance makes the heart grow fonder, or something like that. Take CBS and MTV Nickelodeon owner Viacom. The two media legends split 13 years ago, and then, like Ross and Rachel, they spent the past 3 years slowly flirting over whether or not they should get back together. Now, the deal has officially been reached, and these are the primetime numbers. $28 billion. The combined revenue of the Brangelina-esque new Viacom CBS, 140,000 and 3,600, the respective number of combined TV episodes and movies the new company will own. 4.3 billion. The incredibly massive global reach of TV subscribers Viacom CBS claims to have. Note, 4.3 billion is also the estimated total number of people on the planet who have access to TV. So Viacom CBS is likely overstating their personal reach. 61% versus 39%. When the deal likely closes at the end of this year, CBS shareholders get 61% of the new company. Viacom shareholders get 39% of the new company. And I will get 0% of the new company, because this is how I feel about traditional TV subscriptions. Family matters. The Redstone family ran Viacom until 2006, when it made sense to split off CBS as a separate company. But now that YouTube, Netflix, and social networks are eating into both companies' profits, a remerger seems prudent. Media heiress Sherry Redstone wanted to reunite, but former CBS CEO Les Moonves was against it. But he's been pushed out for alleged sexual assault. So Sherry gets her family reunion. The takeaway: this all comes down to one word: streaming. CBS All Access was actually one of the first streaming networks, but it didn't really take off. I've tried it myself, and CBS All Access just doesn't have enough content to justify its price. Consolidating Viacom and CBS's content all the way from SpongeBob to Star Trek is more respectable and may entice more cord cutters. Regardless, if you want to play the cord cutting space, I recommend Disney and Roku. Bye! That's it for this video, guys. Hey, I'm trying my best to help add more high-quality, entertaining investing content to the YouTube community. If you would like to support that effort, please hit that like button and subscribe. As my channel is still pretty small, every new subscription legitimately makes a difference. Thank you, guys. Have a great day.